Okay, yeah, okay. Oh, that's great. Thanks, Asanka. Thank you, actually, Roger. Lovely. That's great. It's always a reassurance to know that you're being heard A-OK. Yeah, that's super. I've got all my boxes set up this end, so that's all working well. Just that's it. Super. Okay, well, a very good afternoon. What an unusual day we're having again. This is reminding me of yesterday, where we started off with negative risk sentiment, and then the risk sentiment turned positive. We're seeing a risk-off sentiment today turning from negative. You think we've had the US-China trade tensions brewing up. We've had, uptick in coronaviruses out of Wuhan again, with more testing going on, and out of Germany. And we've had negative sentiment between UK and EU regarding trade, the fisheries trade agreement. So that has been largely ignored so far in the European session, and we've been seeing upside across risk assets. So that's why we've just switched our risk tone. We've literally just changed it to neutral, as these risk assets have been marching higher. We were looking at the Australian dollar Japanese yen pair for short. So if we just take a look at our risk currency sentiment dominant pair, we were looking at the Aussie Japanese yen pair, shorting it from just below present prices. So if you are short the Aussie yen, we'd recommend you liquidating that position now, because the risk tone has switched from off to neutral. And just want to update you on that. So it's just interesting. This is a very similar atmosphere in the market that we saw yesterday. So that's added to our cautious tone, because it feels a little bit like a history repeating, and risk off turning to risk on, or certainly being uncertain for the whole day. So at the moment, the best thing for us to do is to be watching the market for the risk sentiment. There are plenty of factors to weigh on risk at the moment. President Trump is starting to get antagonistic towards China again. China's getting fed up with being blamed for the coronavirus by the US. So those two countries are really primed for disagreements and falling out with each other. So the US-China trade woe is a constant thing to be having on your squawk, listening for any antagonism in that relationship that could really alter risk. The other key thing to be looking at is, if we noticed yesterday with oil, although this is not our dominant sentiment for oil at all, however, there was reduction in production levels from Saudi Arabia and other OPEC countries, which has been supportive of oil, and you can see oil still moving higher on the day. So that's giving some bids to the Canadian dollar. But very important to have the squawk on for this, because the squawk really can help with some of those headlines. And there was an excellent headline out yesterday from Saudi Arabia increasing oil production, Saudi Arabia decreasing oil production, which boosted oil prices. So make sure you've got the squawk, just turn it on there, and looking for any details on production cuts, that's definitely a good one. And also looking at any US-China headlines as well. Listen for them coming out the squawk, particularly in the next sort of hour and a half, once the US wakes up and US President Trump starts using Twitter. It'll be AM in the morning there, so there's definite potential for some move. So the best thing to do at the moment, we are neutral as we are waiting for further risk sentiment information. So we'll just go through the changing risk sentiment. So looking at equity space, we can see that Asia handed over negatively, and Europe has generally climbed higher during the session. We also have Dow futures positive, S&P 500 both positive on the session. So European equity markets have moved higher. We have US bond yields moving higher as well. Now that was in part due to a couple of comments from two Fed speakers yesterday, Evans and Bostic, who said they were against negative rates for the US. So that has resulted in some US yields being supported. So that continues to be the case. US yields are supported. we have upside in commodities with gold, crude, both up. We also have a little bit upside in copper. If we just take a look at the charts, we can see that more clearly on the chart. You can see just copper just coming off those lows. We have Brent crude, WTI moving higher, and have platinum moving higher on the day as well, and gold and silver prices just pushing towards the highs of the day. That's been very supportive for risk. Looking at the VIX, we can see that volatility is moving lower as well. You can see here the VIX moving towards the lows of the day, and future markets pushing higher. DAX, Euro stocks, ASX 200, Nikkei 225, all pushing higher. So not really a risk off tone. So as the US traders coming into the market, they should push it one way or the other. So key thing for us to be doing is looking at that risk tone and waiting to see it to shift one way or the other. It could be some fresh sentiment from the US, China, either negative or positively. Could be something coming up from the Fed speakers later. So just looking forward into the events that we have coming up, we're just going to take a look at some upcoming data points, because we might get some sentiment shift from these data points that are coming out. So first thing for us to look at is the CPI data out of the US. So if we just go to the economic calendar, we can see here that the core and the headline inflation, so we've got the CPI year on year and the core CPI year on year, both expected to fall from prior levels. So the CPI year on year data expected to fall to 0.4%. And the expectations are minus 0.2% on the downside and 0.8% on the high side. So medium-sized firms just turn the squawk off. So this data is not expected to be moving the market too much. However, don't discount a reading that comes outside of expectations pushing the market. So it's definitely a risk event to be aware of. Now, the core CPI reading is the Fed's favored level. It did come in at 2.1% prior, 1.7% expected. So just to be looking out for this, 0.0% the minimum expectation. So such huge range of expectations here, and 2.3% on the upside. So, as we pointed out in our risk event outlook, with the non-farm payrolls, we had a 20 million non-farm payroll job loss print. That wasn't enough to substantially move the market. So this isn't expected to be a surprise data point by any means. However, it still could be. So it's worth being aware of it. Out at 130. These are the maximum and minimum expectations for CPI year on year and the core CPI, which is the Fed's favored reading. The next data point we have out is we have, not data point rather, we have some Fed speakers. So the key thing to look out for Fed speakers at the moment is talk of negative interest rates. So if we see the Fed speakers entertaining the idea of negative interest rates, that will be very dollar negative. So that's a key one to look out for, particularly in terms of the US dollar. So for those people who trade the dollar index, that could be a that could be a sentiment shift for shorting the dollar index. And if the dollar index weakens, of course, that would push up euro, Aussie, pound, US dollar, New Zealand US dollar pairs higher. So just to be aware of that, and potentially looking at US dollar CAD, because if we got, if we're seeing oil prices being firmer on the day, we expect CAD strength. And if we see Fed speakers entertain the idea of negative interest rates, we'd see dollar weakness. So a short dollar CAD could be a straightforward sell on any kind of announcement or the dollar index itself. So keep an eye on oil prices at the time, but that's definitely something to look for in Fed speakers. And also it's worth being aware of gold. Gold prices, if we do get announcement of a negative interest rates, that will probably be enough just to push it above that ascending trend line. So you can see here we have this trend line just containing price. You know, we have this triangle. Now, whenever you have this kind of coiling action, whenever you see price coiling up, then price operates like a spring. So this is priming this movement for a breakout. So the sort of thing that could break this out. So technically that would just be, you know, a triangle breakout, you know, entry above these highs, or if we get some news that the Fed speakers are willing to consider negative interest rates, that's dollar negative, and that's positive for gold. So that would be a one definite, if you for any gold traders, that's one definite to look for. And you can just see that coiling action here on the weekly chart. You see prices going coiling, coiling, coiling. And if you look back, when you tend to see these coiling price action, you tend to see a breakout. Now you could get a break down below and then a snap back up, because the longer term picture for gold is very bullish at the moment. So any break down below, you'd expect to find buyers, as long as the bullish picture for gold remains, and any break to the upside you'd expect to be sustained on the current fundamental outlook for gold. So that's just worth being aware of, particularly with Fed speakers and you know, this talk of negative interest rates out of the US. So I'm just going to take this, just going to get rid of these trend lines. Definitely an area to watch for anyone trading gold. And then we've also looked at the way to benefit from that, trading the dollar. So that's a key event coming up. The other major event we have coming up is overnight. We have the New Zealand cash rate. Now, no exchanges are expected out of the RBNZ. Okay, one thing that's interesting here, just don't forget to check on the terminal. We have under our research section, you can see here upcoming interest rates decisions, RBNZ. We can see that the expectations are more likely for a cut, and the chances of a cut is 56%. So it's 56% chances of a cut, so that the market is tilting more towards a cut. Now, part of the reason for that tilt, is that the governor has mentioned that he is, you know, not ruling out negative interest rates. So Westpac, the investment bank, see negative interest rates potentially coming. So the expectations are for negative interest rates, or an interest rate coming for sure from the RBNZ. Now, what's going to be in focus, because most likely they'll see no change. The New Zealand are doing slightly better than other countries. They've only had like 19 deaths in total. They lifted their lockdown on the 27th of April. So they've got a good head start in terms of rebooting their economy. That should be supportive of the RBNZ. So the expectations that the governor shouldn't be necessarily very pessimistic, because New Zealanders are in quite a good position when you compare the country to the rest of the world and how they're breaking out of lockdowns. So the key area for the cash rate is going to be bond purchases. Don't forget, you can read all of this in our must-read section. If you go to our must-read section and you go to our daily risk event outlook, don't miss that publication every day. It's really helpful, and that will flag up to you this key area of bond purchases. Now, the expectations are that the RBNZ are going to double their current bond purchases of 30 billion New Zealand dollars to 60 billion New Zealand dollars. Now, some people are unsure about when that increase in quantitative easing will occur. Some analysts are saying tomorrow, some analysts are saying, well, June. So the point is here the expectations are that eventually quantitative easing will be increased. So that's kind of being priced in, whether it's now or June, that kind of action is priced in. So look for a surprise. So obviously, if one surprise would be if Governor Orr was upbeat, said, you know, the economy's getting back online and we've shut down lockdowns, you know, COVID-19 cases are low. If there's a, you know, there is a, I do see a possibility for a hawkish tilt here out of New Zealand. So watch for that. And one like potential pair, longer term pair to look at that for would be the pound New Zealand pair. So let me just show you this pair. It's worth having a look at because there's a potential divergence here in outlook. Okay, with New Zealand set to open up much more quickly than any other country, that's positive for the New Zealand dollar medium term. Now, for the pound, UK still has to agree an EU-UK trade deal. And the latest announcement that any fisheries agreement will not be part of a free trade agreement has really angered the EU. That's a real, you know, sore point for the EU, and the UK have said that they won't be, won't be talking about a new fisheries agreement as part of a free trade agreement. So that just shows you two things. One, how difficult the EU-UK trade agreements are going to be to actually arrange. And secondly, they still haven't been sorted out and there's still plenty of antagonism. So medium term, if we do get a hawkish tilt from New Zealand, then that could be a good catalyst for buying a longer term sentiment trade on the pound New Zealand dollar, looking for downside from current prices. So that's just one potential trade to be looking out for, particularly in terms of the quantitative easing announcement that we may or may not be getting this early UK time tomorrow morning. So that's one to be looking out for. Cash rate, and obviously if you're trading New Zealand dollar, you just need to be aware of that and what's going on there. The next event, which is just before our video commentary starts tomorrow morning, is data out of the UK. We've got some first quarter GDP data out, and obviously second quarter GDP data is going to be the most interesting. However, this is not going to be the focus, because we know from latest PMI data that the situation is looking bleak for the UK. So having said that, we will still get a swathe of manufacturing output, preliminary GDP, construction, industrial. So the services data might be of interest here, because 80% of the UK's economy is a service-based economy. So that could be an interesting area that the market focuses on in terms of expectations and market moving events for the pound. Either way, that's an event to be looking out for the pound tomorrow. Don't forget, if you want to look into that in more detail, just go to our risk event outlook and you can see our report. But don't miss that, particularly if you're trading the pound. So potential there for a pound New Zealand dollar. Potential short if you get something bullish for New Zealand and bearish for pound. That could be a good could be a good potential sentiment trade coming out overnight and into tomorrow morning. So look out for that. If you're asleep and you're not staying up for the RBNZ rate announcement, that could be a good potential swing trade coming out early in tomorrow morning. So definitely one to be looking out for going forward. Okay, guys, that's taken us through where we are. Obviously, we're in that wait and see mode. Literally, the sentiment literally shifted just before the live webinar. So that's why we had that shift. So I'm just going to go now to questions and answers and see what questions and answers we have got coming on line here. So just, there we go. Okay, just going to check all the question panels. Okay, Tudor. Tariff waiver, is that positive or a negative thing? I took I searched the term on Google and not much to go by. Maybe that's why the Aussie moving to the upside after China said the Tara waiver thing. Yeah, Tudor, that's positive. So it's worth pointing out that you're right. There is a mixed kind of message here. You can just see China waivers some US tariffs. So you've got this mixed picture coming out of China. So some China reports were saying that China was very upset by President Trump, and that there was various reports coming out that it wouldn't necessarily be negative. If the US-China trade deal had to be renegotiated, etc., etc. But yet you've got China waiving some US tariffs. So Tudor, there may well be here some, not quite game playing, but a bit of bravado from China that actually they are vulnerable given the COVID-19 outbreak, and they don't want to rock the boat too much. So there's an old saying, isn't there? Actions speak louder than words. So you wouldn't expect a country to waive tariffs if it was about to negate a trade deal. The rhetoric doesn't make sense. So maybe some people are ticked off by President Trump, but I guess that's pretty a standard day for President Trump, isn't it? He does tend to annoy someone most days with something he says. So that could well be. That's the action, isn't it? So Tudor, I think that's a good point. What is direct monetization? What's the effect it has on currencies? Yeah, I think, Horatio, that is a reference to debt monetization. And it's something that a lot of analysts talk about as being very negative for currencies. So it's one of the key aspects that's talked about for the bullish picture for gold. Okay, so gold's outlook is seen to be very, very positive when you consider things like real negative interest rates and debt monetization. This idea that debt is just increasing, and you can end up countries buying their own bonds directly, not putting them onto the secondary market. So just basically really, really, really ramping up debt and devaluing currencies, and especially with the quantitative easing programs that are going on around the world, huge amounts of bond purchases going on, all of it devaluing currencies. So it does really help the bull case for commodities, particularly commodities like gold. Hi, Rolando. The shift in the sentiment could be because of Rolando. I think that's definitely, actions speak louder than words. So that's certainly giving some boost to risk assets at the moment. It's just hard, Rolando, with the news out that President Trump is very annoyed with China, and you're expecting that sentiment to really dominate, and more COVID-19 outbreaks. So it's been a real mixed tone. Horatio, what's the importance of non-voter central bank speakers? I guess they have influence, but they're not voting. So I guess that's the influence of them. Obviously, a voter is much more important, Horatio, because they actually get to influence whether rates are cut or increased. They get to influence key decisions. So obviously a voter central bank speaker is more important than a non-voter. A non-voter may still be influential, but at the end of the day, they're not voting. So their vote doesn't count. It's just their voice. Okay, don't you think if the Fed speakers downplay negative rates, the market could rise deflation expectations, and that's US strength over gold? Yeah, I mean, the picture for gold is being moved by different things at the moment. So short term, Rolando, if we get, if they downplay negative, we get some dollar strength, that is negative for gold. But if they downplay negative rates and you get dollar increasing, you also get equity markets increasing, that will still keep some bids under gold. So the picture for gold is getting a bit wider at the moment. Obviously, it's very tied up to US dollar strength. So short term, yes, but longer term, no, is my reading of the situation. Yeah, Ravinda, hi. What's the T-plex bull being flattened mean? Could not track this terminology on different websites. That is the Treasury complex. So that's to do with the yield curve of the Treasury bills. So you have Treasury bills and notes, you have them put into 2-year, 5-year, 10-year, and above, and you have that yield curve plotted. And the reference to the Treasury complex bull being flattened is reference to the yield curve being flattened on the Treasury complex. Yes, sir. Roger, hi. Let's have a look at Euro Aussie dollar. So let's have a look at Euro Aussie dollar. Just call up the chart. So, okay, we can see that a big move down in Euro Aussie dollar. That downward pressure obviously is the outlook is looking bleak for the Eurozone. We've had recent Euro selling after the German Constitutional Court has raised questions about the ECB's purchasing program. They're basically their quantitative easing program. So that's been putting pressure on the euro. So it remains to be seen whether that's going to really be a difficulty for the ECB going forward. It certainly has pressured the euro. We've got COVID-19 cases picking up again in Germany. So that outlook is weak for the euro. The Australian dollar, we're seeing that's one of the early countries to come out of lockdown, and with equity markets rising, commodity markets rising, that does support the Aussie dollar. So both medium and short term, I do see further downside in euro Australian dollar. I think the picture is further downside for both of these currency pairs at the moment. So both of these currencies, euro odd, yeah, I do see further downside to euro Australian dollar, Roger. That makes a lot of sense to me, that trade. Yeah. Okay, question now from JP Masha. Should we use the VIX in our analysis? I don't understand the importance of using it. Yeah, it's one little tool, Masha, and it's a helpful little tool. So this volatility just maps the volatility involved in the S&P 500. So the way traders use it, they use it as a fear index. Okay, so when the market is very, you can see here during the COVID-19 crisis, when it's going up, it's these record levels, 84, 85, the market is in intense fear. Okay, and that intense fear is a good tool for you, JP, because you can see, like today, you can see, okay, look, we can see that the fear level, if you like, is going down, pushing towards lows. So we'd expect that to be supportive for risk. So we look at that and you see, look, S&P 500, Dow, NASDAQ, DAX, Eurostox, ASX, Nikkei 225 futures, that they're all pushing higher on the day. So that's all positive for risk. So the way you use the VIX is just another little tool alongside, looking at commodities, looking at equities, looking at currencies. So yeah, I find it helpful, JP, just to have a quick look at the VIX. Sometimes it can just be a confirmation for you if it's a little bit unclear. See, like at the moment, the VIX moving down, threatening those lows. And if we take out those lows, we'd expect the S&P 500 push above these highs and things like that. So yeah. So the way to understand it, JP, is just see it as a fear index. If the volatility is high, it's raising high, it means fear is rising. If it's falling, then fear is receding. Oh, hi, Sanka. What's the best time to trade? Asian session not good, or US and UK, EU are the better ones? Okay, Sanka, it's a good question. Basically, the 3 sessions to trade are all different. The Asia session tends to have narrower ranges. You might play higher spreads, particularly there's a time you need to watch out for, which is at the end of the US and the start of the Asia session. There's a little gap when the US closes around 10 o'clock UK time, and before the Asia session opens, there's a little window. And in that little window, particularly at the end of the US session, you can get wide spreads and a little bit of jumper volatility. It's the time when you're most likely to get a market crash. It's between the end of the US and the start of the Asia session. So just watch out for that little gap. But once Asia session has started, you can trade it, Asanka. It's absolutely fine to trade. Just expect narrower ranges. Currencies pairs tend to move in smaller ranges, so allow that to impact your profit targets. And in terms of the European and the American session, they are where you see the largest volumes, and the best time to trade is the overlap between the UK and the US session. That's a great time. So London morning, so anything from about 8 a.m. to about 11 a.m. are good times in the UK time. And then you get another good time when the US and the UK are both trading together, which is about 1 p.m. UK time to about 5:30, 6 p.m. UK time. So US, UK, both good sessions. Best time is start of the UK, running into the overlap of the US. So basically UK times are probably the best for intraday trading, which is roughly 8 a.m. UK time through to 5:30, 6 o'clock UK time. So that's kind of times you're going to be looking at. Actually, with economies going into recession, one of the key data releases going forward will be trade data. Yes, actually it will be, and especially company earnings. So one thing that a lot of people are speaking about is projected company earnings. So what are companies projecting to earn going forward? That's going to be a very key indicator, and that's one key area that people are looking at. You know, how are companies seeing life like in 3 months, 6 months, 9 months? So that is going to be key. Trade data, obviously, yeah, trade. We need to see things moving. We need to see products moving around, commodities flowing. That needs to start happening. There's going to be a number of different issues. I think the key issue, actually, with economies going into recession is really going to be coronavirus. We don't want a second wave of coronavirus outbreak. And one thing just to point out here, if you look at the world table, we are seeing some stabilization, UK, Italy, France, Germany. Okay, that's been good. But if you notice, we've seen a creep up in other areas. Look, Russia, Brazil, Turkey, particularly Russia and Brazil. Russia's now really peaked up now to the 3rd in the table. So the other key thing to be looking out for is a resurgence in COVID-19 cases. When you study pandemics, what you see is that they come not in isolation, but in waves. So I'm just going to show you I've just got a little screenshot here of Spanish flu. Okay, so this is the Spanish flu from 1918, 1919. Now, this was called the Spanish flu just because it was first recognized in Spain. Spain in the First World War was a neutral country, so it was during the First World War. So as troops started getting it, they were in Spain, they were going back, and they were spreading it all over the world. It didn't originate in Spain, but that's why it's called the Spanish flu, because it was the first place it was kind of politically okay to recognize this flu. And you can see that the second spike in the Spanish flu was much, much more extensive than the first peak. So the first peak was around 5 deaths per 1,000 people. and it almost went as high as 25 deaths per 1,000 people in the second peak. So going forward, that is what's going to be very important. And we're using something called the R factor. You might have heard it in the UK, and I think it's around the world it's being used. So when the R factor is how many people are being infected. So how many people does an infected person go on to infect? So if the R factor was 2, that would mean that one sick person infects 2 other people. So the idea is keep the rate of infection, the R factor, below 1. So that's going to be a very key thing to be looking forward, Ashley. It's not just the trade data. Obviously, that's very important. And obviously, company earnings are going to be very important. But it's also how that relates to COVID-19 and the rate of infection, and particularly some of those other countries as well. You know, Russia, Brazil, Africa are starting to see a pickup in cases as well. So I hope that sort of helps us to put a bit more of a picture there. Omar, yeah, the red and green line in the charts, they are simply the average daily range of the day. So this is the average daily range low, average daily range high of the day. Okay, so it just shows you, so you know, like here, for example, the Aussie US dollar, you can know that price has reached the top of the average daily range and is now pushing above that level. So it just helps you to know how far a currency has moved on the day in relation to its average. Horatio, yeah, debt monetization. Yeah, that's right. I thought that's what you meant, Horatio. Yeah. Okay, Churu. Yeah, few factors that move Dow Jones, so I could know what type of things could drive Dow Jones on a intraday standpoint. So let's have a look. So here's the Dow Jones, and you can see that the Dow Jones is moving in line with risk sentiment. So I don't trade the Dow Jones, Churu, and I'm more focused on currencies. So I'm not an expert on the Dow Jones index by any means. So you'd have to look at what the Dow Jones is made up of, the companies that make it up, to really get a deep understanding of that. But all I can tell you, Churu, on a very simple level, is the fact that the Dow Jones tends to move in line with other indexes. So for instance, you can see here the stocks markets tend to move in tandem. So, you know, a good day for the S&P 500 and the NASDAQ is more often than not a good day for the Dow Jones. So you can use the same kind of principles of support and resistance, use ADR highs and lows to looking to getting into US stocks. I can't be any more helpful than that, Churu. So, my apologies for that. Ravinda, for the Australian dollar, do you see the trade with China hampering it? There's been undesirable diplomatic exchanges between the two countries and does not seem to get curtailed. Yeah, right. The Aussie dollar has some things really going for it and some things dragging it down. So you look here, this has been a good recovery in the Aussie dollar. And Ravinda, that's because Australia and New Zealand have both been some of the quickest countries to come out of lockdown. So that's been supportive for the Australian dollar. Now, if we see US-China trade negotiations going wrong, if we see that trade deal being negated, that's obviously negative for the Australian dollar. So there's a push and pull factor on this. You know, looking at the moment, I think it's hard, it's really hard, because if we get into a recession, if we get second waves of COVID-19, then I expect the Australian dollar to be pressured. But then on the other hand, if there's a second wave of COVID-19, but the Australia manages to avoid it because they've really managed their infections well, then you can see the Australian gaining a little bit more. So I think what's going to be going on with the Aussie is going to be a combination of the US-China trade negotiations, the general global recovery, the rate of COVID-19 infections around the world and how that relates to the rate of COVID-19 infections in Australia. So there's push and pull factors. But should price move back down to this 0.600 level, I would expect to find buyers. So that's what I'd expect. I think the outlook for Australia is still actually quite strong. So any pullbacks here, I would expect to find buyers at the moment as the market is standing. But obviously, there's some of the moving parts that I see, Ravinder. Oh, you're welcome, Roger. Deshabi, hello. What do you think about the sudden movements and risk tone change without any reason? Yeah, is it the market makers bought the traders? So much frustrating about this. Earlier, I followed technicals only without fundamentals. In last month, I've learned some fundamentals and tried with the market, but I thought both tech fundamentals are not working. The only thing is that market makers, hunters, any advice or your thoughts? Yeah, Deshabi, there has been a couple of frustrating days. So don't be disheartened if you're feeling frustrated after these couple of days. They have been frustrating. And in this kind of market, so personally, I'm not trading intraday in this market at the moment because it's just not straightforward for me, Deshabi. I'm not seeing anything that's really, really straightforward. So at the moment, I'm looking at more, is there something that more positionally makes sense? So a longer term trade. So I was talking earlier about that pound New Zealand dollar short. So that's the sort of thing I'm looking at, a little bit more medium term. A lot of what we're seeing at the moment, this kind of, these are relatively speaking small moves. So this like move up here could have been something as simple as US traders just entering into the market. So we just see a little bit of strength in the equity markets. Also, you've got to remember that wait, Deshabi, when you're struggling for a really, really big, clear sentiment shift. So here's an example. So like a good example was here in the oil market. This is a great example, okay? And let's just see there was a sudden spike in oil here. Yesterday, there was a tweet out. Let's go to the 5-minute chart. There was a tweet out that production, Saudi Arabia going to cut production by 1 million barrels per day. Okay, unexpected, unannounced. So that's the 5-minute chart. We'll go down to the 1-minute chart. Now, if you had your squawk on, let's just find that. Here it is. So squawk on. Say you got an after 2 minutes, 1 minute. All right, and say you got a bad fill. Even if you got the worst possible fill. You could have taken some pips out there. So, Deshabi, when you're struggling, wait for something clear. Wait for something really directive. Something that's really going to move the markets. Okay, and that's kind of the example that you got yesterday. Sudden announcement with oil. You could enter, and it's a sort of situation with that kind of announcement. You could use a little bit of leverage, and that can make up for some of the quieter times. I missed that. I just come back from my lunch and I just saw what I missed. So you're not going to get them all, of course. And it's frustrating. I was frustrated. I was like, there's nothing going on. And I've missed I've missed one of the only things going on. And I'm there, for hours at my screens. And just when anyway, that's the way it goes. So Deshabi, don't give up. Keep going. It takes some time to get the fundamentals and technicals together. But eventually when you get it, you really won't go back, because you'll see how the market is moving. And then you'll start to see things, Deshabi, over a longer term that make more sense. And you'll be like, oh, hang on, like the gold market at the moment is a really long, medium, longer term upside for the gold is quite strong. So when you start to see, opportunities like that, it makes up for the more faffy things. One of the things is every day, Deshabi, we are pointing out the strong and the weak currencies, okay? Because that's our role here as an analyst. We need to point out to you which is the strong, which is the weak. Now, I'm not trading every single currency pair that I'm highlighting as a potential opportunity. Even though I'm keeping people constantly in tune, because you learn the skill. This is how I analyze, this is how we look at the markets. And then you have to pick. So see it like a shop, Just because there's lots of things on offer, you don't buy everything. You buy the things that you want and the things that offer the most value. Exactly the same way. We're presenting opportunities, and you've got to look and learn and think, so hang on, this is a really strong opportunity because the fundamentals are deep. So you have to develop that conviction level, and that comes over time. I hope some of that helps, Tashabi, but just keep at it. Keep at it because it's worth persevering. Yeah, hi Rolando. Yeah, good question, Rolando. I wonder if we could use a Spanish flu example, as we have so far better healthcare and medicines than 100 years ago. Well, what's interesting about the Spanish flu, Rolando, is the Spanish flu hit people in their 20s to 40s harder than any other group. So the current COVID-19 crisis primarily, although it does hit people of all ages, it primarily hits people who are older, but the Spanish flu primarily hit people in their 20s to 40s. Also, what we can learn from the Spanish flu is that they weren't that good at social distancing. So it's part of the reason why they had these waves. So I think we can still use the Spanish flu as an example for the danger of waves of coronavirus breaking out. And the Spanish flu is a good example because they didn't really social distance so well as perhaps they could have done. So I think it's part of the reason it's a timely example, Rolando, is the example of what happens if we lift restrictions too soon, too early. Oh, that's good. Yeah, you're welcome, Jashabi. Yeah, good, very excellent. Let's just check the other questions and our. Oh, Sergey, excellent, good work. Article explaining bull flattening and so on. Sergey, thank you very much for that. Gold star for you. That's really good. Thank you. And just going to look at some other questions we've got. I've got a question here. Think how the US, what's the outlook for the US dollar, Canadian dollar? Well, let's just have a quick look at US dollar, Canadian dollar. And we'll just move this down to the. Okay, so we can see at the moment that with the volatility moving down lower, we can see that the US dollar has been working as a safe haven currency at the moment. So with volatility falling, stocks rising, that has been calming for the US dollar. So the US dollar is falling. So we expect US dollar weakness. Now we see, similarly, we see crude oil rising. So you can see WTI, Brent crude, increasing. So that's very positive for CAD. So rising oil, positive for CAD. Rising stocks at the moment is negative for the US dollar. So we would expect US dollar, Canadian dollar a downside. So if this current sentiment does turn on and is fully on, we would expect at the moment sellers from the US dollar CAD. So, you know, any return back up to this 1.400 handle, just above the 1.400 handle, would expect to find sellers. And obviously a key place to look, how low can it go? Well, one obvious area to look is this ADR low. So just above that 1.39, just below that 1.3940 region. And also that recent support level will be a good target for any US dollar, Canadian dollar sellers. Yeah, okay, that's great. Well, that's super. I've covered all the questions there now. Thank you all very much for the session. It's been a pleasure as always, some excellent, stimulating questions. Really enjoyed that. So I hope that you all have a really good afternoon and enjoy the rest of your session. And I hope to catch you later. I will be covering the videos this afternoon, so I will be back on the terminal. So don't forget, you can always ask me a question via the back end there at the back of the videos as well. Yeah, you're very welcome. Yeah, thank you guys. Thanks everyone. Take care now. Goodbye.